you guys make really good points about is this guidance or more? It's kind of like a reset on Dell's position in the AI market. It's another example of like, well, if we're all sort of very hyped up about data center builds out and NVIDIA's getting all of this love and we're very focused on energy, then why do we not talk more about Dell? If you build a data center, whether that is hyperscale or it's an on-premises smaller facility that any given sort of software company operates themselves, Dell is likely to play a part. You know, they assemble servers. That needs to happen. You don't just sort of put all the chips in a pile on the floor. And so it's taken a while for investors to kind of give Dell credit for that. A part of the reason being that because this build out of infrastructure is so fast, Dell's margins on the AI server business have really suffered because you have to spend money to move quickly. And a big part of the guidance they gave us through to fiscal 30 is that profit picture for the AI server business is really going to improve. And as you say, the core business, which is kind of PC as well, is supporting them do that in the interim.
Dell stock is up 2.5% today. It's hit a 52-week high today. It's up 30% year to date. It's not an all-time high. That was back in 2024, but it's certainly going in the right direction here.
Right.
So, Ed, how does a company position itself as an AI player? Are they playing that up? Are they saying, hey, we're in a good position? I mean, how are they kind of positioning their company as an AI story?
So right now in New York City, all of the executives are on a stage talking about bigging themselves up.
Yep.
And the main argument that they're making is that on-premises part I was talking about. So in the future, Dell argues, 85% of all enterprises are going to have some form of on-prem footprint themselves. Okay. And Dell, which has a rich history of selling to businesses of small and large and the public sector, is best positioned to participate in that. And the idea, right, is that this all started with the hyperscalers, the cloud computing companies, and their capital expenditures. But the ripple effect is that we're now seeing smaller companies in software in particular justify budgets to spend on their own technology because they see a return on the other side, literally revenues driven by AI. So that's what Dell's argument is here. You know, you guys, the story is that through 2030, they've basically almost doubled their forecast for the top and bottom line. 7 to 9% top line growth and adjusted EPS growth of around 15%. Yep. And a big part of that story is just more people doing business with them.
So one thing that stuck out to me, Ed, is the comments from the COO, Jeff Clarke, saying we were all wrong about how big we thought the AI market was 2 years ago, and it's nothing but bigger. Does Dell have a reputation as being conservative when kind of guiding along its vision, or is this a company that usually nails it in terms of its forecasts?
I don't know conservative is fair. I mean, like, you have to assess the business that they're doing in the here and now and the pipeline of business that they say has to come. And so, like, Dina Bass, our colleague, did a really good job of explaining that in the quarter. There is the sales that they've had committed to them. They booked $5.6 billion of new AI server business in the quarter. They shipped $8.2 billion worth of business in the quarter, so like actual sales. And then in the future, they have a backlog of $12 billion. It's not that new an idea that there's a pipeline of business. It takes time to assemble servers, ship them out onto location. The thing that they need to justify is like, what's the value add that they do? So I told you earlier in this segment, they say margins will improve. The thing is that all they're really doing is assembling something. They're not sort of contributing some amazing technology. That's what NVIDIA's doing.